It's a real pleasure to be here this afternoon. I've always appreciated and admired the work that the Alabama Forest Owners Association does, and so it's a privilege to be among the group of speakers that you have. I know actually I have a tough act to follow, and because I'm talking about timber markets, if any of you guys have too much stress after this presentation, you know what to take. After this, that's for sure. The presentation, or my discussion today, just wanted to provide a brief overview on timber markets and just a brief update on timber markets. Just to give you a little bit of background. Sorry. Which one? Okay.
It'll be the left and right.
Okay.
The right will be forward.
Well, anyway, well, just a brief background so you have some perspective on where I'm coming from and offering feedback on markets. I'm a portfolio manager with Forest Investment Associates. Forest Investment Associates was founded in 1986. I've been in business just about 30 years. We currently have $4.5 billion under management throughout North and South America. Independent, employee-owned firm, and specialize in primarily institutional timberland management. We work with a lot of pension funds, endowments, and other institutional investors to manage timberland around the world. This is a map of our timberland properties that we manage. This is by county. You can see we have a very significant presence throughout the southeast U.S., northeast U.S., a little bit out west, and some properties in Brazil. Roughly 2.4 million acres under management. A little closer to home, the discussion today on timber markets, I'm going to focus, because we have a fairly limited amount of time, I'm going to focus primarily on softwood, and because we're in Alabama, primarily southern yellow pine. And to start the discussion, just wanted to provide a brief overview of historic timber prices. And I know some of you may appreciate this historic chart more than others, but just to highlight, or just to hit some high points, going back to 1992, this is a chart from 1992 to 2015. You can see in 1992, we were kind of ticking along. And then many of you remember the mid to late 90s. And one forestry professional in South Alabama said, well, back in those days, you could fall off a log and make money in the timber business. And I always thought that was quite humorous, but I don't know if he was in the timber business making a comment like that. But anyway, when you look at the price of saw timber, that was the peak in 1998. A lot of that had to do with the northern spotted owl out west and the shifting supply. So much supply was taken off the market out west, and frankly, the southeast was a beneficiary of that dynamic, where it took so much supply out of the northeast markets out west, and so the southeast became a more significant supplier of softwood lumber. We kind of ticked along through the early 2000s. And started gaining a little bit of steam there in the mid 2000s. A lot of that had to do with what was going on in the broader real estate market. Of course, I think we all remember what was happening in the mid 2000s, and housing starts were on the order of 2.2 to 2.4 million housing units per year, which was an all-time high, just a white-hot housing market. And then we had the financial crisis. Really the lumber markets began to soften up around 2007 and just took it on the chin in 2009. And ever since then, since the financial crisis, we've just basically been ticking right along. And so you can see with the top line there, that's southern yellow pine saw timber pricing. The green line in the middle, that's chip and saw. And you can see how dramatic the impact was of the financial crisis on the southeast or southern yellow pine timber markets, especially here in Alabama. One thing that you note, the bottom line, the pulpwood prices, those have been ticking right along. Pulpwood prices have just been ticking right along throughout the state. Of course, their prices vary from one pocket to another, but overall, pulpwood prices have been fairly stable and in some areas quite strong. So that's just to provide a bit of historical context. If you make sure, looking forward, if you look at where we are today and then you look out into the future and try to project what's going to happen, there's a spoiler alert. I know a lot of you would like for me to tell you what prices are going to be next year, but I can't. I don't know. I can sit here and act like I know, but I don't know. I can tell you some things that I do know. When you look at the solid wood market for southern yellow pine, the way I would describe the broader market is long-term opportunities buffeted by near-term challenges. When you look at the long-term opportunities for southern yellow pine, primary opportunity over the long term is a recovery of the U.S. housing market to more normal levels. Another opportunity for the Southeast is filling the supply gap that is being created in Western Canada due to the mountain pine beetle. I know many of you have heard discussions about mountain pine beetle and it's killing off a lot of the pine out west, and that's very real. It's a very real phenomenon. The third area of opportunity, long-term growth in emerging markets, notably in China. Near-term challenges. Even though we anticipate a long-term recovery in the U.S. housing market, a challenge right now is that we're seeing a recovery, but there's a modest recovery in single-family home construction or single-family U.S. housing starts. And why that's important, a single-family home uses roughly 3 times, on average, about 3 times more lumber than a multifamily home or an apartment. And so when you look at, not all housing starts are created equal. And so when you're looking at overall housing starts, and currently they're about 1.2 million units per year, a higher proportion of those housing starts are actually multifamily versus single family. And that's certainly a challenge. Another near-term challenge that we're working through is the expiration of the Softwood lumber agreement with Canada. We all know what happened with the Softwood lumber agreement. The Softwood lumber agreement expired this past fall, and we basically have a 1-year grace period, and that will continue to be a challenge in the short term until we have more clarity. Third short-term challenge has been the strong dollar. Relative to other currencies around the world, the U.S. dollar from 2014 to 2015 surged in value. And then fourth short-term challenge is just the weaker economies outside the U.S. The U.S. right now is, to some degree, a beacon on the hill. You wouldn't know that necessarily watching the current political dynamic and looking at certain aspects of our economy, but relative to other parts of the world, the U.S. is actually quite strong on a relative basis. Just to provide some additional context into those key points that I mentioned, looking at the housing starts, the Softwood lumber agreement, just going to provide a little bit more detail here. When you look at that actual housing starts on an annual basis, this goes back, just like the timber price chart, this housing chart goes back to 1992. And you can see the impact that the financial crisis had on housing construction. And in 2009, we were at a historic low. Housing starts had never, since they were tracking housing starts were never as low as they were in 2009. You can see where we are. We've had some good recovery, but we're still below the long-term average of roughly 1.442 million housing starts is the long-term average, and we're still ticking along around 1.1 to 1.2 million units. So there's an area of opportunity. As I mentioned, until we get more single-family housing units and more momentum in that segment of the market, we'll still just have a few challenges. When we talk about the Softwood lumber agreement between Canada and North America, I have a map here that shows the forest zones of North America, and hopefully this will put things into a bit of context. One thing that I don't know if some of you saw when Prime Minister Trudeau from Canada met with President Obama, I think it was a couple of months ago, they acknowledged the importance of the Softwood lumber agreement, and they both, I think it was a talking point that their advisors gave to them during the meeting, but I heard them say multiple times how good the relationship between the U.S. and Canada is, and this softwood lumber issue is just an irritant. And yeah, I am irritated. I hope they work it out, but they've used that term several times to describe it. So to put the irritant into context, the Softwood lumber agreement expired in October 2015. The period between November and February, November 2015 and February 2016, softwood lumber imports from Canada jumped 36% during that time frame over the same period last year. And so because of the strong dollar relative to the Canadian dollar, and the fact that, as I said, we have a grace period, that's a big issue. One other point that I would note, if you look at the map of Canada and where the forests are located, even though we talk about the lack of supply coming out of western Canada due to the mountain pine beetle, roughly 50% of Canadian lumber production is actually coming from east of the Rockies, Quebec, Ontario, and some of the other eastern states. And so when you look, I'm going to skip ahead, there's a map of British Columbia and Alberta, and you can see the impact of the mountain pine beetle on the Canadian forest. And you have a map there on the right that from 1999 over the 10-year period to 2009, and you can see the expansive impact of the mountain pine beetle. But when you go back to the map of Canada and you look east of British Columbia and Alberta, you see that there's still a lot more timber up in Canada. The mountain pine beetle is certainly going to have an impact, but you certainly have to take into account the other areas of production. Currently, just to give you some additional figures, currently U.S. softwood lumber supply, about 30% comes from Canada, roughly 32% from the U.S. West, and about 37% comes from the Southeast U.S. So when you look at Canada and the issues associated with the Softwood lumber agreement, there are both challenges and opportunities associated with that supply dynamic. Going to the strong dollar, again, just to give you some context and the importance of looking at currency and looking at the exchange rates. This is a basic chart from the last 10 years of the U.S. dollar relative to the euro and relative to the Canadian dollar. And you can see in 2013, or at the end of 2013 through 2015, those currencies dropped in value relative to the dollar. That makes our products more expensive in those markets and makes their products much cheaper in our market, thus increasing the competition. Things have stabilized. The U.S. dollar has stabilized over the last 6 months, but that surge is still in place. It's just not, our dollar is not appreciating anymore, but the impact has been felt. As a footnote too, some of you may know the Federal Reserve is meeting today. When we're looking at interest rates and the decisions by the Federal Reserve to raise or lower interest rates, more so probably than certainly in recent history, the Fed's decisions on whether or not to raise interest rates are being impacted by what's going on in the rest of the world. Again, our economy may be doing well, but the ability to export products is certainly being impacted by our strong dollar. And that is a significant factor when looking at...
Those curves you have over there, they get flattened out and get the exchange for the next 6 months.
That's right. That's right. When you look at the euro to the U.S. dollar, it would basically be flat. These are just annual data points, but things are just basically flattened out. When just changing gears a little bit and talking about the pulp and paper segment, the way I would define or describe the broader market for the pulp and paper, looking at areas of opportunity for growth, and then the reality of areas that are in decline. Opportunities for growth, higher living standards in emerging markets, as more people move into the middle class in various economies around the world, the more disposable income they have to spend on consumer goods, things that require packaging, and greater demand for consumer products and tissue and other hygienic products. In addition to when looking at the type of demand that's being created by this emerging middle class, the key grades of pulp and paper include tissue, specialty paper, specialty pulp, and carton board or container board. These are the areas of the pulp and paper sector that are seeing growth. Areas that are in decline, and that most of us would probably not be surprised, would include newsprint and uncoated free sheet, basically paper used for printed media. When you look at the economy today and look at digital media, it's no surprise that the demand for newsprint and uncoated free sheet is going down. So these dynamics are certainly creating what may be called creative destruction within the pulp and paper sector. New mills being constructed and new lines being constructed that are producing pulp that is oriented to these areas of growth. Pulp and paper mills that have been producing the paper primarily oriented to printed media, either closing down or reducing production. We certainly have seen that here in Alabama. Other market trends and developments. Areas that we're monitoring where we are actually seeing opportunities for growth and are just trying to look out over the horizon and try to be as realistic as we can about market opportunities. I would start with biomass, pellets, and biofuels. We, within our firm, are seeing a meaningful impact, especially from the pellet markets and exporting the European export market. South Alabama, the Florida Panhandle, the Southeast Georgia especially, we've seen a dramatic impact on the demand for pulpwood for use in pellets. Another area of opportunity, engineered solid wood products. I know that Auburn is doing some exciting work with solid wood products, and there is a particular emphasis on cross-laminated timber and new construction technology which will enable builders to incorporate more wood into bigger and taller buildings. With these types of market opportunities, more and more we're seeing a transition to smaller diameter logs, whether it's to be sawn into solid wood or for use in these other types of products. And that seems to be a broader trend where more and more our management regimes are less oriented to growing large diameter pine saw timber. Rather, we're seeing, really more so than I've ever seen, a true point of no return, where once your pine timber gets past a certain point, you're not going to get any premium for growing it any bigger. And that's having a material impact on our management regimes. One final point that I'll make, carbon credits and other eco-services. I used to probably be about as skeptical of this area. I try to always maintain a practical outlook. And we actually closed on a fairly large carbon sale this past year. It was a meaningful sale. And I always said that, well, we have as much carbon as you want. If anybody wants to come buy it, can come buy it. Well, they did. And so it's that continues to be an area I was a student at Auburn, and I graduated years ago. Ever since I was a student at Auburn, people were always talking about carbon credits, and well, we just closed a fairly large deal, and so it's something that, especially with the recent Paris Climate Accord and some of the other developments in the market, this is an area that we will continue to monitor. Other eco-services, I will place an emphasis on water. That water and water features, we expect to become more prominent when we're looking at land management, resource management. Water is a key issue that we monitor. Just to recap, to put the chart back up, again, where we see opportunities for growth, we continue to see long-term opportunities for the recovery of the U.S. housing market. When you look at where solid wood prices are right now, we would expect a long-term gradual recovery in sawtimber prices. Pulpwood, we expect to continue to tick along. We continue to see robust demand on average across the Southeast. Again, we are dealing with certain pockets where demand has been reduced due to mill closure or other impacts, but overall we expect pulpwood demand to tick right along. And because this is the Alabama Forest Owners Association, I know everyone's interested in the timber markets, but I also have to include a brief comment about the timberland markets. And certainly, this is something that I find reassuring, and it continues to be a compelling reason as to why a group like AFOA still has clients. The fundamentals for timberland continue to be quite strong, and even with the volatility, and even with the challenges with the timber prices that we've experienced over the last few years, the timberland market, the timberland values have held up quite well. You can see this is just like with the timber prices. This is a long-term chart going back to 1992, and this is the average timberland values based on what's called the Neck Creek Timberland Index, and it's just a broad index covers roughly 24 million acres of private timberland in the Southeast. And you can see the long-term trend has been quite steady, especially if you're from the standpoint of a long-term investor. We had things. We're basically back up to the 2008 peak levels. We had a bit of a challenge in timberland, but we recovered quite well just since 2008. So, well, with that, yeah, thank you so much. It's real pleasure to